This week, we're diving into the forces reshaping managed services, the surge of MSP rollups and consolidation, the biggest trends set to define the year ahead, and how circles of influence are shifting who really shapes the channel conversation. As private equity and venture capital redraw the competitive map, we'll break down what MSPs need to watch and who's setting the agenda in a fragmented media landscape. If you want to know where power and opportunity are moving in 2026, this episode is your roadmap. It's Wednesday, January 28th, 2026, and I'm Dave Sobel. Welcome to the Business of Tech Lounge, the live version of the Business of Tech podcast. We welcome questions and comments throughout the show, so please submit them in chat. If you have a question, we'll happily respond to it. And thanks to ABC Solutions, a Business of Tech Plus supporting vendor. ABC Solutions specializes exclusively in accounting, supporting managed service providers and IT firms. Check them out at abcsolvesit.com. Our live stream support is provided by Rhythms, delivering 5G connectivity solutions for MSPs. Reliable internet access for everyone. Visit rythmz.com for more information. A reminder, I am watching chat and will take questions in real time. Rich Freeman is one of the MSP channel's most respected analysts and storytellers with nearly 2 decades of experience covering managed services, cloud, cybersecurity, and M&A. After serving as executive editor at Channel Pro Network, he now delivers sharp industry insights through his award-winning Channelholic newsletter and as co-host of MSP Chat, where he's become a go-to voice in the forces shaping the channel, especially the impact of AI and consolidation of MSPs of all sizes. Rich, welcome back to the show.
Well, thank you very much for having me back. I always enjoy this, Dave.
Well, likewise. I love having you on. And joining Rich is Jessica Davis, who's principal analyst at Omnia and a former editorial director at Cyber Risk Alliance, bringing deep expertise in managed services, cybersecurity, and M&A. Her recent research zeroes in on the new wave of MSP roll-ups, including detailed profiles of Harbor IT and Blue Mantis, and she's currently collaborating with Jay McBain on the 2026 update to the channel's Circles of Influence, mapping out who really drives decision-making and innovation in today's ecosystem. Jessica, welcome back to the show.
Thanks so much for having me back. I'm really excited to be on the show with both you and Rich at the same time. Very cool.
Well, when this all worked out, I knew we'd have a fun conversation with the three of us. So I'm going to sort of start with your thoughts on the industry consolidation. We're a couple of weeks into the new year. We've seen a number of acquisitions roll through. We've also seen some of the unique investments. Rich, the last time you were on, you and I were talking about the way Thrive has been investing. And Jessica, you've done some deep dives on some of these roll-up companies. So I'm going to sort of set the stage here a little bit. Rich, help me lay the groundwork. What are you looking at this new wave of roll-ups like Shield and Harbor IT and Blue Mantis, and how do they differ in your mind from the earlier PE-backed deals?
Well, so I have two different responses to that. What's really different in particular about Shield and Titan, which is the other venture capital-backed MSP roll-up, is that they are bringing a different kind of caliber of AI expertise to the business. Now, we're seeing all of the big roll-ups invest in internal AI capabilities. They are going out and acquiring companies. They're hiring developers. They're building their own tools. What's a little bit different about Shield and Titan is they're doing that with assistance from AI experts, literally brought in from Silicon Valley. And you look at Shield in particular, the big thing that's happened since I was last on the show, Dave, is they've now got a new CEO who used to be the CIO at Palantir. And the head of their technology operation over there used to be in the product organization at Palantir. Palantir, for all, we all know all the big high flyers in Silicon Valley. None of them really flies any higher than Palantir, I think it's safe to say. So we're really, really talking top flight AI expertise. And as we did discuss the last time, Thrive, one of the parent companies behind Shield, has an agreement directly with OpenAI. So absolute world-class AI expertise coming into an MSP roll-up to create operational efficiency inside the business. And then ultimately, I assume, to create AI-enabled services that they're going to be able to roll out to customers as well. And then there's a whole, I mean, if we broaden the conversation out beyond Shield and Titan, there's a whole other issue that is on my mind and I worry about a little bit. But I very much want to hear Jessica's thoughts about Shield and Titan.
Well, perfect time. I'm Jessica, weigh in, and then we'll come back to the broader issue.
Yeah. So I was super interested to listen to you guys talk about Shield the last time that Rich was on the show. Great episode. I loved how Rich talked about how they essentially created a test bed for AI innovation inside this roll-up, which is something that really the tools vendors haven't had themselves. I mean, you think about the large tool vendors for MSPs and ConnectWise, Kaseya, the platform companies. Those companies have a lot of work on their agendas besides AI. AI is one piece of the whole puzzle for them. So are they able to focus on it the same way as a company like Shield is? Not right now. I mean, they have other work to go with their platforms. I'm sure they have small groups working on it. ConnectWise is buying into it, as Rich has pointed out recently, with the Zofic acquisition. But this is really a new kind of company, and it's putting pressure on other companies in the ecosystem to up their games as far as AI innovation is concerned. It's a really interesting time. It's a race.
All right, Rich, broaden it up a little bit. Let's give me the landscape then that we want to weigh in and see if we can figure out like if there's a larger trend going on here.
Well, here's the larger concern, and I've written about this recently. This has been on my mind recently, and credit where it's due. This is based heavily on something Kevin Lancaster of Better Tracker and Channel Program wrote on LinkedIn. After reading that, I had him on MSP Chat, the podcast I co-host. And it's this whole idea of the AI flywheel. I mean, we've been talking forever and ever about the advantages, the inherent advantages these big roll-ups enjoy in terms of economies of scale and their ability to invest in cutting-edge technology and so on. But they enjoy certain advantages in the age of AI that should be a little bit sobering for smaller MSPs. Basically, as we all know, data is, choose your cliche, the gold, whatever it is that makes AI work. It's all about the data. Giant MSPs have a lot of customers, therefore they have a lot of data. They've got a lot of data, therefore they've got better AI. They've got better AI, therefore they're delivering, in theory, better services to the customers. Delivering better services to the customers, they're attracting more customers. Meanwhile, the better AI they're developing is making them more profitable because they're using it internally as well as with their clients. And because they're more profitable, they've got more money to invest in the AI. It's the AI flywheel, basically, where these companies have certain advantages that are just very difficult for a smaller MSP to counteract. I mean, you're just not going to be able to accumulate the kind of data that gets the flywheel turning, basically. And so what Kevin said, and I think this is one of the key sort of ways out of this conundrum for a smaller MSP, is you're not necessarily going to be able to compete on the capabilities you can provide a customer. He said, you want to compete on focus. And so specialization has always been a really important, valuable growth driver for MSPs. I think that is, if you are a smaller company, you want to go it alone, because obviously one way out of the conundrum is just to sell into one of these roll-ups. But if you want to go it alone, investing in expertise, specialization, I think is one way potentially out of that bind.
All right, I'm gonna throw out an idea, and then I'm also gonna, Jess, I'm gonna let you weigh in and get your perspective. So Kevin's a smart guy, and he's thought a lot about this, but I think he's thinking a lot about the what I'll call traditional managed services layer of I will deliver help desk services and I will deliver remote monitoring and backup and all of these sections, which I would make a pretty clear case of, yeah, that's going to get commoditized anyway. right? And so there's an element of like, that's where those guys are focusing. Because every time that I talk to AI experts on the show, they keep talking about the difficulty of the workflow layer. And in particular, most small organizations just don't have their head around their own workflow. I just did an interview this past weekend where we were talking about the investment in building out workflows. And if you're small and nimble, you can spend a lot of time working with customers on understanding that productivity layer, even if you're getting disrupted underneath. And a counter argument to size is, well, smaller firms can be much more close and intimate in the last mile and get much closer on understanding their business logic. Now, there's a lot of work to get them there. I've said a lot. Jessica, I'm going to throw it to you and go, okay, you got a couple of interesting competing ideas on where this is going. What are your instincts saying?
Well, when I think about what Rich was talking about, the advantages that the large MSPs have, I think that's absolutely true. I think it's maybe a comparison I would draw is if you look at technology companies versus large enterprises. If you look at the Googles and the Oracles and the Salesforces and the Amazons and the Microsofts versus Coca-Cola or United Healthcare or one of those companies. Those companies in the enterprise aren't going to have, we saw this 10 years ago in the enterprise. They didn't have the AI chops to build their own AI internally. They were still developing that. There weren't use cases in place. Everybody was struggling with that. And there were experiments here and there, but nothing to scale, nothing in production. And it took a long time to get there. Whereas these technology companies were ahead of the game. I think that there may be an analogy to be drawn, and there's a place for the MSP platform companies like the ConnectWise and Kaseya and all the other RMM and PSA companies in working to build the AI technology internally that some of these smaller MSPs can use to then compete with the larger MSPs that have the test beds internally. I think that that's a strong possibility going forward and it's a value proposition for those platform companies to provide that kind of service to smaller MSPs. I don't think anyone's arrived yet at being not the roll-up MSPs and not the platform companies either. It's still, everyone's still working towards that goal.
Well, my favorite service leadership data agrees with you, particularly when we say, and I cite this all the time right now, is 81% of the space is doing less than $10 million in revenue, and 67% of the entire space is doing less than $5 million in revenue. So we've got, while the roll-ups are fun to talk about and we and take up a lot of the conversation, if I'm looking at it from total number of this, of MSPs delivering in the space, they're by far not the majority of this space. The majority is still serviced by very much the long tail of these service providers. Now, what I think is also interesting, and I think we need to sort of think about it, is like there's an element of some of the founder-led models that are going to compete with some of the traditional PE playbooks, even in the investor side. I'm starting to see a lot of different models. We had Abe Garver on last week, who's talking a lot about the competitiveness of the different platforms. So, Rich, I'm going to ask you a little bit, like, are you getting a sense of, are we starting to see tiering of the kinds of the roll-ups? Are you starting to see patterns in terms of the way that they look into the roll-up? Are they very much all the same? Are you starting to group them? How are you thinking about that large segment?
So interestingly enough, and great minds thinking alike yet again, Dave, because I recently interviewed Abraham Garver as well, because he's from Focus Investment Banking. For folks who don't know him, he is as plugged into the M&A landscape and managed services as any human being on earth, basically. And I got into this topic with him a little bit, and he was unwilling to name the companies, so I will not name them, at least on the record. I will not name them either. He sort of feels like right now, if you just look across the roll-up landscape, there are 6 companies that are a cut above the other roll-ups, which are themselves pretty big companies. But you're starting to see a set of 6 companies kind of pull away just because they have more money to invest and they're buying at a faster rate. One of the interesting things that hasn't really happened yet, but that I do expect to start seeing on a bigger scale, and in particular, you'll see it, I think, in this big 6 kind of zone, is where some of these other still very impressive roll-ups are going to be investing in internal AI development teams and tooling and so on. You're going to see some of the very biggest companies that can do this going out and buying companies like Zofik, the AI company that ConnectWise just bought. And in fact, again, can't name names, but there is a company that does something very similar to what Zofik does that I have it on outstanding authority, has already received multiple offers from some of these really big MSPs. These offers were declined. I don't know how generous they were, but that's something. So basically, there is some tiering developing on the roll-up landscape right now. It's not so easy to see at this minute, but I think in 2026 it might actually start to be more apparent.
Well, I think I'm with you. Now, Jessica, I'm gonna use this as the opportunity to pivot a little bit and say, okay, so you're now into your new life as an industry analyst and researcher. They're stepping a little bit away from the journalism side that Rich and I are fighting out on getting all those scoops. Give me a little bit of a sense of where you're seeing the trends when you look at this. You're doing some research around influence and thought. Give me a little bit of a sense of the way you're looking at who the winners in the MSP market are going to be this year versus the other side of that.
And at Omdia, we're preparing our forecast for the year in terms of where we're seeing the revenue numbers for managed services overall. And last year we came out of the box with a higher forecast that got reduced as the year went on. This year we're still formulating it, but we're looking at a lower forecast than we had last year. At the top end, we're expecting maybe 10% growth, although that's not official yet. And we may come up with a range where 10% is the top end of that, and it could go lower than that. So it's not as rosy a picture as in previous years. And there are some companies that might not make it. There's a lot of geopolitical stress and economic stress on organizations right now. Companies are buying new PCs and maybe decreasing their managed services budgets because of that. That said, if going back to the roll-up situation again, there may be pressure on some of these roll-ups from their PE owners to cut some costs as they're looking to invest in AI. And so they may be looking at reductions in force possibly for the first time. And I don't know if that's something that they will report publicly. I kind of doubt it, but that's certainly a possibility for this year that we're looking at. I would say that I just wanted to add, in terms of the PE roll-ups, when I'm looking at them, I'm working on some larger research about it. I'm classifying these companies in terms of whether they are keeping a centralized brand like Integris and Blue Mantis. The brands are basically the acquired brands are basically retired once they're acquired, or the new charters and the evergreens, which keep the existing brands that the customers are used to working with. And I'm also looking at the experience for the founder or seller of the company, and whether they are staying with the company or whether it's an exit. I have 4 different aspects that I'm looking at for this upcoming research, and I'm hoping that it will be helpful for managed services owners as they investigate which direction they want to go in when they sell. Um, I particularly appreciated in Abe's appearance last week. And another tangent, sorry. I
Oh,
appreciated
please.
Abe's appearance last week. His description of the types of sales that we're seeing. MSPs sales to other MSPs, PE firm to PE firm, and PE to MSP. I thought that was a great way of stratifying the market out there today, and they're all very different markets.
So, Rich, I'm dying to know, based on what Jessica just said, you've got your ear close to the MSPs on a lot of this. Is there something you can see in terms of the trends that are coming out in terms of the way they want, who they want to sell to? Are there particular conversations that are going, oh, like post acquisition, those are working out better. These owners are happier with this deal. Like, you've had a lot of those conversations with MSPs. Are there emotions and reactions that are driving their choices of which platform to engage with?
Yes, but it really is kind of all over the map. It's like
Okay.
anytime I've ever done an interview with somebody who works with MSPs on, an exit and like on the sell side, basically of that transaction. One of the things they will always say is you need to go into that process understanding what it is that you want. What are you trying to accomplish? And based on that, you're going to be looking for a very different kind of acquirer. So there are plenty of MSPs out there who kind of like the new charter evergreen sort of model because they get to keep, their brand and workflows and like that's kind of what they're looking for. Some of the benefits of scale without completely losing everything that makes their company distinctive. There are others. There will certainly be others. I suspect I haven't spoken to any MSP like this, but there are bound to be MSPs out there who are going to look at a Shield or a Titan and say the future of this industry is AI, and who's got the best AI, and that's what they care about. And so they're going to sell into a platform that they believe is going to set them up to take advantage of that. And then obviously there are just folks who are looking for an exit, and that whoever's got the biggest check and so on is going to be who wins there. So there is no one answer that I'm seeing.
Okay. Now we're going to get to play a little game of crystal ball here, and I want to do a little bit of a prediction because I'm working on an idea. This is very much in the idea formation, and I can't think of two better people to bounce this off than the two of you, because I've been thinking a lot about these investments, particularly as I think about the way OpenAI is using these platforms to try and establish this as a viable option. In my mind, this feels like it could go one of two ways. And the first would be the traditional way that somebody like, the software providers are going to say, hey, what we're going to try and do is we're going to try and take this out and make this software stack available for all the MSPs that are out there. That would be a very traditional channel move. But another model that might be kind of interesting is if the providers themselves, like your Thrive, your Titans, turn around and go, we've built this incredible infrastructure in AI, and we're going to allow smaller providers to resell that and become something of a quasi distributor of the platform and just say, we're just going to be the end-to-end software stack to provide this, and smaller providers can ride our coattails and deliver that last mile. Knowing that I haven't really prepped you on that, get a little sense of like, hey, which of those feels more viable, knowing that the answer might even be both. I'll throw it to you, Jess. Like, what's your take on my thinking here?
I think that's super interesting. It certainly would be disruptive, right? And I've been thinking about something along those lines myself. I don't know if that's going to happen. I don't have a good crystal ball take on that yet. I mean, what would happen if Shield came out and offered their new platform to all the MSPs that are out there, not just the small MSPs? Would they set themselves
Yeah.
up as another ConnectWise and Kaseya, or would they want to maybe take everything direct to end customers? Who knows? Who knows? But there are, gosh, it's interesting times in this space, right?
For sure.
Rich?
Well, I mean, what immediately popped into my head, and this is anecdotal, 'cause basically something I've heard from one particular large MSP, but I interviewed Joshua Skeens, the CEO of Logically, in the not so distant past, and this kind of topic came up. Not this exact topic, but it was similar. And he was pretty clear. He basically said, from his point of view, running a services business and running a software business are two very different things, and he doesn't really feel you see a lot of companies get both of those really right. So he at least is not interested in that model where maybe we start essentially reselling our stack through to other MSPs. The other thing that pops into my head though is just I think of something like the 20, which is another one of these
Yep.
roll-ups, and with a really interesting kind of model where they have this kind of, I always call it an accelerator. There's a program you can get a part of where they sort of help you standardize and clean up your workflows and get your tooling right and all this stuff that will help you grow. And that in and of itself, has a lot of value for the MSPs. But the other thing that it does, of course, is give them a good solid look at you, and they can then decide, is this a company that in addition to working with in this accelerator mode, we might want to buy? Like, we're going to buy the cream of the crop working with us on that accelerator side. And of course, it's the great thing for the 20 when they do buy someone is the company they're buying is already totally into using the same tool stack, the same process. They've already done the onboarding process, and literally it's just sort of the accounting that you have to kind of, so they can onboard a new acquisition in 30 days or something like that typically. And you can imagine a model where if you're one of these big MSP rollups and you've got these really valuable tool sets and you're selling them through to other MSPs in some ways, maybe it works. Yeah, I'm just thinking out loud here, David. Maybe it works in a similar kind of way where in addition to monetizing that investment that you've made in a way that presumably doesn't kind of undercut you competitively, also kind of creates the kind of minor league for future acquisitions. It's a thought.
It is a thought. It would be really interesting to see if there has this level to it. Now, before I run out of time, I know I've got one other area that I want to talk about. And Jess, I need you to give us a little bit of a perspective. You and Jay McBain are working on an updates to the circles of influence approach. Can you give us, I know it's not out yet, can you give us a little bit of a preview of like what you're thinking on and what you're working on? Particularly because I know guys like Rich and I are spending all the time figuring out like where the conversation's happening.
Yeah. So I'm a newer analyst. I'm helping Jay update this. He's been working on this for years, where he has a list of the publications that are out there, the podcasts that are out there, all the important people that everyone needs to know. So I'm helping him update that. We'll also be putting out a report that's looking at some of the changes that we've seen in the media ecosystem for the channel, which includes your recent deal, Dave, your acquisition. Also includes the acquisition by the company I used to work for, Cyber Risk Alliance, of the company Rich used to work for, Channel Pro Network. And then also change at the company I work for now. The Channel Futures brand has been sunsetted, so that to make room for the Channel Dive brand that Informa Tech Target has introduced. So there's lots of changes across the media ecosystem. We were talking earlier before the show started about how the two of you are we think the last two independents out there running their own organizations, which I think is, injects so much freedom of editorial judgment into the mix. It keeps things fresh. It keeps things honest, and Yeah, I
Well,
just appreciate your voices, both of you.
well, thank you. I know fiercely independent and such. But Rich, I kind of want to get your take on this as you're thinking about this. You've worked at several of these different organizations, and now you are independent on that. What I'm interested in understanding is like help. If are vendors and MSPs particularly are we finding that they're adopting and adapting to these new rules of influence? Like, are they? Do you find that they're consuming information in different ways when you talk to them? Are they surprised by news in ways that you're unexpected? Like how are in particular we think about the MSPs, how are they consuming information differently now?
Well, so there's actually a lot in there. I mean, like every, and I think you're operating on a more sophisticated level in some of this than I am here, but everybody is consuming information in new and different ways. I mean, I remember seeing some research, it's probably a couple of years ago now, in terms of where MSPs go to get information. And I'm an old guy, so I just, assumed the answers were going to be channel publications and newsletters, and then some other newer forms of media. But YouTube videos, podcasts, and again, this is like 2 years ago. That's the number one source of information for MSPs. I assume people are getting information on TikTok and so on. So I mean, the entire media landscape is shifting away from traditional media to newer forms of distribution, and with them newer kind of distribution formats in terms of what works and what doesn't work. And we're already seeing that with MSPs as a generation of MSPs kind of age out, and younger owners and operators move up. You're going to see more and more of that. So I think that is definitely a part of what's going on out there. Beyond that, just in terms of the relationship between MSPs and the sort of traditional channel media, I guess I haven't seen a significant change in the trust level, in the frequency with which people consult those publications. And I mean that in both a good and a maybe not so great way. I mean, I think people need the information that these publications provide. I think there is an understanding or a feeling quite often out there that these people are, their money comes from the vendors. Doesn't mean their reporting isn't honest, but there is a certain kind of noticeable sort of bent in terms of what they're going to write about, that comes from that. And I don't think that, again, I don't think that means not going to pay attention to these people. I just think there's always been a certain is jadedness the right word about, and at the same
Right.
time, that they no shortage of readers, viewers, etc. People need the service these guys provide.
Mhm.
True before and true now.
Yeah, no, I would agree completely. I mean, I talk about it all the time. It's all about understanding financial incentives. The idea of just understand how different organizations make money, and that gives you insight into the way their perspective works. And your job is to synthesize several of these together. Well, as we wrap up our time, oh,
I would
go
also
ahead.
say that nobody goes into journalism with the idea of making a lot of money. They go into journalism because they care about doing that kind of work. And but organizations that get bigger and bigger and bigger, they have, as they scale, the motives of the people who are doing that operational work day in and day out. There are other motivations as well that change things. So yeah.
Well, I think then the follow up I want to ask, particularly Jessica, is you're thinking about the research, because when your comment about like you don't get into it for money, it's like, well, partly I wish people had told me that before I started this. But the second thing I'll laugh about is I think people would also say the same thing about community efforts, right, and the investment in growing community. Talk to me about the way you, again, knowing you're still working on it, but I'm sure you've given some thought into the collision of influencers, like coverage, and community. Like, how does the community element of that play into the way you're thinking about influencers?
Oh gosh, Dave, that's such a good question that I might turn right back on you. I know you've done so much work looking at communities over the many years you've worked in many communities. I just am turning the turning it all back on you.
Okay, all right. I'll take the ping pong, and then I'll let Rich weigh in a little bit. My head, where my head's at these days is in particular. I think communities thrive when they coalesce around a particular direction, vision, or a thing that they want to accomplish. If I think about this from a fandom perspective, which is a simple way of talking about it, we want to revel in being Marvel fans or superhero fans or something along those lines. And that's, we like a certain video game, and that's why the fandom thrives around that, and the more new discussions that's able to continue that. When I apply that in business, there's often the hey, there has to be some central idea of why we're getting together. If we look historically at the MSP threads, there's two time frames when I thought that this was the richest version of community. The first was the introduction of managed services, when I think everyone was figuring that out, and thus the I need to learn and none of us know what we're doing was the driving force behind people coming together. And the second, Microsoft did a really nice job of coming together around a product, right? So the small business server community was very robust because there was a product that was complex and required a lot of learning and coordination, and then it coupled with, hey, we've got a business model that goes around this too. So they get coalesce around a product. One of the things that I think about a lot in terms of the way the communities in the managed services space have evolved is that those early ones were very driven by a group of equals. And what I mean by that is most of the vendors that serve this space were roughly the same size. I'm putting that in, as the customers they had. I still know a lot of people that can brag about, well, Arnie Bellini installed my ConnectWise, right? Rich is smiling, Jessica's laughing. It's like, there are stories of those people that did that when it was one entrepreneur helping another entrepreneur, and it was equals and peers. And what I think now has happened is with with the amount of money and investment that's happened in this space and growth, we're seeing more disconnects between various levels. I am very confident that there are communities within the top performing MSPs that we have talked about have their own private circles that run where peers of size are talking. But what that also has done is created a bit of a stratosphere of that. And so that when I think about that, I'm starting to think about it at the levels of influence that those communities discuss in, and how they can come together around a shared purpose. And I think oftentimes the reason that they struggle a little bit is that that purpose is a little less well defined. Does that sort of answer your way that I'm thinking about it?
That's really an interesting perspective, Dave, and I'm so glad that I turned that question back on you, because I know you've done a lot of deep thinking about it. I love that Arnie Bellini installed my platform, and those were the good old days, right? And now things have changed a lot, and there's a lot bigger MSPs out there, and there are still tiny MSPs, and the platform companies have gotten a lot bigger too. I wonder, and the
Well, I will say I tier it a little bit more based on, and I keep falling back to my financial motivations, is I like to think about the ownership model a little bit more than just size. So,
yeah.
for example, I think it's possible. It's intensely difficult, but it's possible for a single entrepreneur, a small group of entrepreneurs, to grow a very, very large business without bringing on investors. For example, you can go to the bank, you can get you can do that without bringing on traditional like PE or VCs. But so I don't want to exclude from that. So I'm thinking, I don't necessarily think it's that, but I do think that it's entrepreneur versus like equity funded, VC funded. And again, I want to separate those out. And by the way, if we're recognizing that there are multiple kinds of private equity, there are ones that are, investing with a short time frame. There's others that have a much longer time frame. There's very different control theses. And what I think you actually have to do is you have to cluster people by their business growth model, which can be tied to their investment model. Rich, you're nodding a little bit. Am I completely crazy here, or is there a way of layering these communities that makes more sense?
Well, I mean, I'm going to come at this from a slightly different angle. So, I mean, first of all, could not agree more with you that community, from the get-go of managed services as we know it, community has been a defining feature of how MSPs launch a business, grow a business. I would argue community is as important, if not more important now for those 81% of the giant long tail of MSPs that you were talking about before than it's ever been in the past. And in a way, this sort of kind of puts a bow on a lot of what we've been talking about, because if I'm a $1 million MSP competing with $100 million MSP, I don't have the internal resources. I don't have the data that fuels the whole AI flywheel. But if I'm $1 million MSP, you take $100 million MSPs and you put them together in a community, and now all of a sudden you've got something that is maybe a little bit closer to parity. So I mean, community as a source of mutual aid and best practice sharing, and holding one another accountable. It's always been important. It continues to be important, especially for smaller entrepreneurial MSPs out there. The thing I've been mulling a little bit recently is there potentially a way forward for all of those smaller MSPs who are in some danger, at least, of being crowded out by these giant companies if they start to collaborate in a different kind of way? And I mean, the practical obstacles are kind of enormous, but if that $100 million MSP has a giant data lake, why can't $100 million MSPs pool their data and have an equally large data lake? Why can't they pool their resources through some kind of trusted intermediary, and create their own AI dev team and so on? Like I said, it's easy to say and very, very hard to do, but it is something that I've been thinking about lately.
Ooh, now see, I'm almost going to leave this. I'm going to end it here because you've left such a tantalizing idea. But I would be completely remiss on my own ethical framework if I did not highlight. I own a community now that is literally invested in this space. So, so for those of you who know my style on this, the bias alert graphic needs to come in here because, as of last year I did not, but this year I do invest in a community. I will end the thought by saying like, well, that's one of the reasons why I think having an independent community to do that conversation in is super important. I think that delivering the framework of where that space for that conversation can happen, to take a great idea like that and give people a space to work on it is kind of the interesting piece. We could do this all day, but at the same time, I need to be respectful of both your time and our listeners. I'm going to ask you both, like, what's the best way if they want to continue the conversation and ask those follow-up questions we didn't get to? Jessica, what's the best way for people to reach out?
People can find me on LinkedIn, search Jessica Davis and channel, and I'll be the one who comes up. Or you can also reach me via email, jessica.davis@omdia.com. I'll probably be faster with LinkedIn, though.
Sounds good. And Rich, what's the best way to find you and what you're doing with Channelholic?
I'm going to say the same two things. You'll find me on LinkedIn, Rich Freeman, Channelholic. Feel free to email me, rich@channelholic.com.
Well, awesome. I look forward to having you both back. Jessica, you'll have research to talk about. And Rich, you and I always have cool topics to talk about on any channel stuff. So I know we'll have you both on soon enough. Thanks both for joining me.
Thank you.
Thank you.
And I also want to thank Shyla Jones, who joined as a member on YouTube since the last time we were on. Thank you very much for joining as a member. Members of both Plus and on YouTube get access to content early. Like this interview that I want to preview. David Espandola, who's an AI strategist and the founder of Brainius, joined me to talk about how AI is reshaping business strategy, risk, and governance, specifically around IT service providers. We talked about the practical considerations for MSPs in adopting AI, and we focused on some of the frameworks for decision making and the importance of responsible implementation. Here, I'll give you a preview of the interview where we were talking about what are some of the ways to get started. Are there, like, for people that are trying to get a sense of like, well, where do I start? Is it readiness assessments? Is it governance frameworks? Like, literally, if you sort of said like, this is the first thing to start working on, what would your advice be?
So I think doing a readiness assessment would be a good starting point. Perhaps you have somebody inside the organization that you can appoint as an AI leader, and that person can drive some of these processes. If you don't, you can bring in a partner that can help you with that. I like to reference a customer that has done this really, really well, and I really like the way they went about doing it. So let me share that with you. So this particular client, they understood the importance of getting started with AI. They wanted to do it right. And what they did is, first of all, they appointed somebody in the organization to be the champion for AI. So that's step number one. That you have a leader in the organization that's going to be responsible for leading these initiatives. And once that was done, then the next step was to train the organization. So they brought in training partners to help the organization understand the fundamentals of AI. They developed a document with the specific policies that the company wanted the employees to follow, and they shared the specifics of those policies within the training. And what was really interesting is that they had certain AI tools that they had approved, and they made those tools available to the employees, but only after they had been through the training. So the training was sort of a way to get people to really learn the basics and not make some basic mistakes, right? What you don't want to do is you don't want your employee going out to ChatGPT and asking ChatGPT to craft an email without any knowledge of your culture, your processes, your products.
So Business of Tech Plus subscribers get interview early in the dynamic ad-free feed. It's a benefit of supporting the show. Visit businessof.tech/plus to sign up and get early access. That interview will be released for everyone on the weekend. Thanks to ABC Solutions, a Business of Tech Plus supporting vendor. ABC Solutions specializes exclusively in accounting, supporting managed services providers and IT firms. Check them out at abcsolvesit.com. Our live stream support is provided by Rhythms, delivering 5G connectivity solutions for MSPs. Reliable internet access for everyone. Visit rythmz.com for more information. And vendors, you too can get your name mentioned on the live show. It's part of our vendor support level for Business of Tech Plus. Listener, if you'd like to support the show and get even more from the Business of Tech, check out our membership options at businessof.tech/plus. There's a free tier with access to daily stories and transcripts, insider access for bonus analysis and early access to interviews, and the leadership tier with exclusive vendor briefings, data reports, and behind-the-scenes insight into the channel. Every membership directly supports independent reporting and helps me continue bringing you the research-driven coverage of the IT services industry. Again, that's businessof.tech/plus. If you have a question and are listening to the recording, send it in at question@mspradio.com, or if you're watching on YouTube, put it in the comments below. Thanks for joining me for the Business of Tech Lounge, and I will see you next time.
Produced by Picture This Video. Part of the MSP Radio Network.